stocks that have also done well after that: PSU banks, financial services banks. This is basically the crux of the market that has done well. Let's talk about the ones that have not done well. Something like a Nifty Realty or an IT, for instance. Do you see the tides changing for some of these sectors as we step into 2026?
Yeah, absolutely. I think for IT, we're very, very positive. I have recently added a few stocks in the IT space to my portfolio. The reason why IT has not done well, I think, has a lot to do with what's happening in the US, both in terms of the tariffs, although that does not affect the service sector directly. But what you keep hearing about a hike in the fee of US H-1B visas because a lot of Indian tech companies rely on that visa category. So there's a negative sentiment around IT companies, and we all know that companies like Infosys and TCS, and in fact, even in the mid cap segment of IT space, a lot of these companies get a majority of their revenue, 63 to 83% for large IT companies, comes from the US, and even the revenue which comes from other parts of the world is US dollar denominated. So that's the reason why these companies, you look at the valuations of an Infosys or TCS, they're trading at close to their historic lows, and any upside in terms of revenue should augur very well for these companies. Keep in mind, when dollar is where it is, when dollar appreciates and reaches 10, 15, 20% appreciation in a year, that is very good news for these companies because they earn a lot of their money, in fact most of their money, in US dollars. So that's, on one side you have very low valuations, and on the other side you have dollar appreciating. So it's just a matter of time before things settle down in terms of tariffs and trade with the US. I think IT is definitely a sector which you should all add to your portfolio, both large cap IT, and I've added a couple of small IT stocks to my portfolio.
Okay, so that's on IT. But Rajat, just to prod a little bit ahead, it's interesting that you're turning bullish on IT. Is it the larger end of the IT basket that's looking good, or do you believe the mid caps now look more attractive? We've heard that big acquisition announcement from Coforge. What is your take on which segment within IT are you focusing on right now?
So, there's two segments here. One is the legacy businesses, and Infosys is one of my favorite stocks. Today it's trading at a price where its dividend yield has jumped over 2.2% or so. So, as these companies adopt to artificial intelligence, these companies should do well. Infosys, in particular, a lot of cash on its books. They can make acquisitions as they adopt artificial intelligence, and as the tide turns, even if it starts trading at the multiple at which it used to trade, we are then talking about a 20% upside immediately from here. So I think to that extent, I find at the current price, the stock to be trading 20% lower than where it should trade. But the interesting stocks that I've added in my portfolio are, there's a company, Intellect Design Arena. That's a company which is changing the very base on which, banking softwares work, because right now they all work on Finacle. So they're trying to change by developing the core banking system, the core operating system on which banking platforms work, because banks are the biggest clients of these IT companies. Right now, a lot of banks use Finacle. Now, that's such an old technology that, to embed the new age artificial intelligence tools on that platform is very difficult. So, what they're doing with eMash, which is the core product they're developing, they're making a core banking system which would be attuned to embedding a lot of new age artificial intelligence tools on that. So when you talk to your RM, or when you feed in any details, or you meet someone at your bank, everything gets captured, and then there's a laser GPI which reads into all of this. So the bank will know a lot more about you than you would know. Right now the stock is trading quite expensive in terms of valuations. Not very expensive, 45, 50 is not very expensive for an IT company. But if they succeed in this and they get a few big orders, they've already got one from a big Canadian bank, then these are the growth companies that I'm betting on. So at one end, I say I'm buying something like an Infosys, and on the other, I'm buying these mid cap companies which are developing a lot more products which will help adapt to AI. Because creating AI like US companies have done is one thing, and to model on them and create something for the future based on that technology is quite another. And I think Indian IT companies should do very well in that space going forward.
Okay, so that's on Indian IT. And you did say
These platform companies, including a Honasa. Even let me also throw in some of the fintechs here, Paytm or PB Fintech. Any of these that you're liking?
Yeah, Paytm as a stock, I think things have changed for them now that they have integrated their clients with a payments bank again using different banks APIs. And keep in mind that Paytm, I think, makes a lot of their revenue now from third-party product sales, whether it's credit cards or disbursement of loans. And with the kind of reach they have, I wouldn't be surprised because I've always said that the future of financial services will belong to companies which have a huge reach in terms of distribution, which is why I don't even differentiate between banks and NBFCs, or for that matter these fintech companies. I'm actually quite positive on Paytm. I've recommended it. I have it in a few client portfolios where the risk appetite is higher. As a disclaimer, I don't own it myself, but a few of my clients do. I'm very positive that their revenue will keep rising quarter on quarter as their distribution keeps bringing them more money. So Paytm as a stock at 1300 rupees is something I like.
so that's the take on Paytm. Interestingly, we've spoken about Nykaa.
By consumer discretionaries, if I were to include FMCG in that, then that's one segment that I really like. There's a couple of stocks which we've increased our allocation to. One being Hindustan Unilever, and the other one is Asian Paints. But if I just may, because since you were talking about Tata Capital, I will give this as a disclosure, and I'll tell you this. Tata Capital is a big part of my holding now and a big part of the holding of a lot of my clients as well. And this is one stock which I think people are not realizing how cheap they're getting it. If you go by the price to earnings multiple of the stock, it would match to its main competitor, which is Bajaj Finance. But keep in mind, Tata Capital has a humongous advantage when it comes to NBFCs in this space versus its peers. First, they have they don't even need any external companies to lend money to their own group companies, whether it's a lot of these Tata listed companies, Tata Steel, Tata Chemical, Tata Consumer, a lot of these Tata companies they can keep extending loans to. The other thing is, you will see a lot of new revenue lines being added into Tata Capital. I said this when the company got listed because the mandate was to list Tata Sons. What they've actually done is they've carved out Tata Capital and listed that as a separate NBFC and said this is the upper layer NBFC, not Tata Sons. So with time, you'll see a lot of the businesses from Tata Sons, the financial services business, will keep getting added into Tata Capital. This will happen. It's a very, very good stock to buy at this price. And again, just like Paytm, they've got their APIs with, they've got some 250 players who have websites and who have a lot of reach where they can just integrate their API into their travel agency and they provide end-to-end solution on a website from loans for travel, loans for home, loans for everything. You just do your KYC and everything is integrated into Tata Capital. So very, very positive on this stock. So coming back to your question on consumer discretionaries, I'm very positive in FMCG space. It's gone nowhere for the last 1, 2, 3 years, I think. Now with the GST rate cuts, I think you can start feeling it. Now it's when you buy something which is FMCG driven, you realize that the prices have come down substantially. So two stocks that we've added, one is HUL and the other is Asian Paints. We've increased our allocation to that. I think it's only a matter of time that this new competition, which is making a dent into Asian Paints, will not be able to compete with it as Asian Paints keep dipping its margins for the existing distributors, which they're doing, and there's a fight going on around that. Keep in mind, Asian Paints has not lost any market share. They were still 50% plus of the total paints market 3 years back. They're still 50% plus today. You've had a lot of these Opus and JSW paints and a lot of these paint companies come, but there's margin pressures, but they've not lost market share at all. So these are the two stocks that I really like in this space.
looking good on the consumption front. HUL and Asian Paints have made it to
the CV, and what is your take on CV? Because we were likely seeing a very sharp upcycle already. Would you like to play through the OEMs, or would you like to play through the auto ancillaries? I beg your pardon, or would you like to play through the OEMs?
Yeah, to be honest, I've not looked at the auto sector for a while. I have Tata Motors in my portfolio. That's a stock that I've been holding before it got demerged into two companies, but that's something I keep holding. I am actually quite positive on the EV space growing with everything that's going on and the government pushing that. So I think companies which are in EV, whether it's two-wheelers or four-wheelers, if you had a 5-7 year perspective, you can see what's going on. No GST or 5% GST on those vehicles, government encouraging them. So whenever there is so much push from the government side, it's just a matter of time before that space starts doing well. So when you look at EV space, pretty much everyone in the two-wheeler space has already adopted to EV. And in four-wheeler space, I think Tata Motors clearly is the front runner in this space, Tata Motor passenger vehicles. So these are, some of the stocks that I think you can add to your portfolio. Tata Motors, both commercial vehicle and passenger vehicle. I have it, but again, I've not looked at this sector in any great detail recently that I can talk about it.
Percent higher on the Nifty metal, Kunal. Uh, Jindal Stainless, SAIL, Nalco, Hind Copper we've discussed, and we've taken your view in the morning as well. But what about the others? Any favorites within that pack?
So, in terms of the best performing stock, Vedanta is the best performing name from the large cap metal pack. But then I think you are also seeing signs where Jindal Steel, Tata Steel, they are trying to make a comeback for themselves. Individual charts for these stocks are very strong, and we are looking at a breakout of sorts for these names, especially from their swing resistances, and that I believe could be a very positive sign for the entire sector as such, because right now you're not just focused on one or two names. Till maybe last week or the week prior to that, you had just maybe handful of stocks like Vedanta, which was trading at a very strong degree of momentum. But right now you have names like Hindalco, Jindal Steel, even JSW Steel has managed to pick up good pace from its recent swing lows. Tata Steel has done phenomenally well to try and come back from that 160 levels to 172 plus mark where it's trading right now. SAIL, I think for the second or the third day on a trot, you're seeing some decent price gains for the stock price. So I think all of that augurs very well for the entire metal sector.
Okay, so that's the take on metals. Kunal, I don't know if you track this stock. It's Force Motors and it is the top Nifty 500 gainer in the year gone by. I'm sure you do it. Force Motors is up 205%. Your take here?
Yeah, it's a very bullish chart. And in fact, there was a point where Force Motors went down 20%. I think it was in the mid of 2025, August, September somewhere, where the stock had fallen down from 20,000 levels to I think 16,000 odd mark, or maybe lower than that. But then the way the stock has managed to show signs of recovery indicates that we are looking at a major trend building up. So extremely bullish on Force Motors. My sense is that the stock from current levels could easily surpass the previous highs of 20,000, 20,500 plus, potentially the start of 2026.
The other sector that's rallied, Rajat, is the defense index, but we're seeing a bit of a cool off on that. In fact, the past few months, we've seen 3.3 lakh crore worth of proposals being passed by the Defense Acquisition Council, and you have a slew of beneficiaries within that defense pack. How are you viewing this pack? Because we've seen that run up. Now we've seen the valuations rise. Focus shifts towards execution. Can they really deliver with regard to the hype that's been created?
Short answer, yes, the companies will deliver. But from for your perspective and the perspective of a lot of people who watch your show, I think nobody will make money here. The reason I say that is because, when I look at the valuations of a lot of these defense companies, Bharat Dynamics, Bharat Forge, Mazagon Docks, Bharat Electronics, Hindustan Aeronautics, so a lot of these companies, they're all trading at valuations. You know, India and Pakistan are not going to war every day. And I think sentiment drove the prices of a lot of these stocks to a value or to a level where it seemed like these are the everyday gadgets which everyone will play with. So yes, there is a need. The government has allocated 79,000 crore or something. A lot of this money will come to a lot of domestic companies as well, in addition to foreign players who will supply these things. But no matter how you look at it, it's going to be a while before these companies start justifying the valuation at which they're trading. If you look at the last 5 7 year chart of these companies, they've run up like crazy, and these are very very good companies, solid businesses. If you want to buy and hold for a very long term, definitely you will make money. But right now, to add or take position in this despite the recent fall, I don't think so, because I looked at defense sector very closely and I thought, yes, some very interesting things are happening here, but the valuations just don't justify adding capital into this sector.
On defense, and yes, that 79,000 crore rupee that we saw, the green